Hello, everyone. I hope you can hear me. Very pleased to be here, and thank you for taking the time to listen to what we have to say. I'll just share. Right, so here we are. Just to give you a bit of background about myself, my name is Dinesh Sharma. I work for a company called Drewry Maritime Advisors. In the past, before working with Drewry, I have been a seafarer myself, so out at sea for extended periods of time. And I have worked in a container terminal for a couple of years. I've been with Drewry for about 12 years now, following the various maritime markets. What I'd be doing over the next couple of minutes is walk you through what our current thoughts are with regards to the impact COVID-19 has had on maritime trade and transport, what our current thinking about the road to recovery is, and really sum up with what's happening here. But before I dive into the discussions or the key points, just to give you a very quick background, we established in 1970 in London. We've completed 50 years now tracking the various maritime market segments. And we track all the maritime markets, not just containers. We are divided into 4 business units. We do extensive amounts of research through the in-house databases that we have. We do bespoke advisory services. We have a supply chain advisory which extends beyond the ports and shipping into providing consignees and shippers with advice. We also look at logistics and warehousing within that. And we have a financial research advisory business unit as well. So that is who we are. To start off with the current situation, COVID-19, what is happening currently, the WHO, like a number of other organizations, is providing us with regular updates of what is happening with COVID-19. Now, as we can see, the one thing is clear: the number of cases have been increasing. Lots of people getting infected with COVID-19. It is fatal, so some amounts of death as well. What we also know about this is that currently there's been no vaccine that has been developed for COVID-19. So very unreliable in terms of how this is panning out, unpredictable. Clearly, it is impacting a lot of people. Our thoughts with those who have been infected, the fatalities. Our thoughts with the health services, who I hear from my friends and colleagues are working globally. They're working long and extensive shifts to deal with this and to look after our loved ones who are infected. And finally, being an ex-seafarer myself, my thoughts also with the seafarers who are out at sea, who know exactly what isolation feels like, being away from home on the ship for about 6 months of time at any given point of time. So our appreciation to all of those, and our thoughts with those who have been infected. One thing with viruses and with COVID-19 is we do not know how this would pan out. So any sort of guidance is based on perhaps taking a rational view on looking at various other sources, and I'll discuss that with you. The very nature of viruses is they can be unpredictable. We don't know whether COVID-19 would be one of the one-off events like SARS, MERS, Ebola, which took some lives but then went very quiet, or whether this is going to be something like the seasonal flu, which mutates frequently but is a recurring event. So that is something that we don't know. So no one can predict the outcome as yet. I'd like to thank Transport Events, and in times like these, I think it is very important that we share our thoughts so that we can put forth our thoughts with regards to developments and what is happening in the sector, and either collectively think about what's happening in the industry or individually think about what's happening with our businesses. So that is just a brief background about it. Now, the impact on the sector, on the maritime sector, I would cover three parts. What I'll talk about is what has happened in the demand side in the last 3 months, in the first quarter of 2020 in the various segments. I will then look at what's happening on the supply side, and then finally wrap up with what we should be thinking about in the long term. On the demand side, clearly this has had an impact on all the markets. On the container side, we know manufacturing fell in China in February, although it recovered sharply in March. There's been lockdown in a number of consuming nations globally. Our estimates, we track the global container port throughputs quite regularly and very closely. Our estimates for January of this year was that the global container port throughput had declined by about 2%. It declined by a further 9% in February, and our early estimates for March are that the global throughput would have declined by about 2% again in March. Overall, we believe that the first quarter container port throughput demand would have declined by about 4%. So that is what has happened so far on the container side. On the bulk side, if we segment this into the energy segments and the dry bulk segments, what's happened on the energy segments, of course, the crude oil is a different story, also being impacted by the supply side. But the other segments like the LNG, the LPG, the coal, we see these markets being roughly about stable. I have some notes here. So if you look at the LPG trade, it declined in China and in Japan in the first quarter of 2020, whereas in South Korea and India, the LPG trade still continued to grow. Overall, globally, we estimate a 0.3% decline for the full year in 2020. The LNG trade first quarter, Japan declined in the first quarter, but China, India, and Taiwan, LNG imports grew in all these countries. Overall, we estimate a 1.5% growth in LNG trade this year so far. The crude oil segment is different. We anticipate roughly about a 20 to 25% decline this year in crude oil trade. If we look at the dry bulk market and we further segment this into the agri trades, which is the grains and the fertilizers, we anticipate these to remain fairly stable as well this year. That is not to be impacted. However, if we are looking at the industrials, then because of the lockdown, the decline in manufacturing and construction, clearly this is going to impact iron ore demand. In China, we know the iron ore demand was significantly down in January and February. We believe that this was followed by a sharp recovery in March.
Sorry, Dinesh. Sorry to interrupt, but could we have your slides on full screen?
Sure.
Thank you. Okay. Thank you.
Right.
Thank you.
What are our overall estimates so far for 2020? How do we think the bulk trades will pan out? Overall, we believe that the bulk trades would be down by about 7 to 8% in 2020. Of course, the caveat being a lot depends on how the containment of the virus, the outbreak of the virus, pans out in the next couple of months. Now, on the supply side, we've noticed a number of sailings that have been cancelled. We've noticed a lot of waiting time before getting into ports. There's a lot of capacity that is being idled. And we are following this very carefully and tracking this on a weekly basis. A lot of this information is available on our website for all users to see. So please, if you're interested, by all means, feel free to log on to these, to what information we have on the website. Of course, the consequential impact of all of this is that this is going to create a severe strain, a financial strain on all businesses, whether it is the ports, whether it is the shipping lines, or the other suppliers within this sector. The longer and the more widespread the outbreak is, the more damage would this cause. So that is what has happened so far. Now, what is our outlook and how do we think things would develop? As I've said before, because of the uncertainty associated with how this virus would develop, the guidance is only at a very high level. And the wise thing to do in these circumstances would be think about developments in a number of possible scenarios. Currently, we have a rather benign base case or likely case, although our confidence in this base case, as I said, is lower than usual because of the uncertainty associated. And it depends how the world recovers in the second half of 2020. What we are currently assuming is that there is a recovery and a full recovery in second half of 2020, and there is very little after effect. That is the key assumption that we are working with. Now, what is driving our thinking behind this sort of the direction of travel or our assumptions with the base case? Firstly, I would say if we look at a number of economists, IMF put out their projections earlier this week. They follow a similar path of some amount of damage first half of the year, followed by a recovery in the second half. If you look at the previous outbreaks of viruses, we are hoping that we are able to better understand or contain this virus effectively in the first half of the year, and therefore second half should be recovery. If we consider what has happened in China so far, and if we use that as a guide, then clearly we are looking at containment to take effect in about 3 months. So these are the reasons why we feel a base case looking at potential recovery in the second half is reasonable. As I say, a lot depends on how things will pan out in the second half. The only thing that is certain is that 2020 will be volatile. I will end over there, ladies and gentlemen. So this is our view on what has happened so far in the first quarter and how we see things panning out. Thank you.